बेटे मीटिंग चल रही है अब्बू की, ओके?
We can hear you, brother Shamoon.
Oh, can you hear me now? Yeah. Okay. Sorry about that. Okay. So, sorry. Thank you everyone for joining. Assalamu alaikum to those that know me, and hello to those that don't. I don't know how everyone found this webinar, so I will give a little bit of background, and then we'll kick off. So, a couple things. So first, who am I, and why should you care? I am the anti-guru. I am just the guy that learned about Bitcoin 2011, I want to say. I've worked with it foundationally. I've coded various things for Bitcoin. I've forked Bitcoin. I've been keeping abreast of various newer technologies, Ethereum-based things, and even Cardano-based things to some capacity. My views are pretty well known to, again, people that do know me, and to those that don't, I'm happy to share it. I believe that Bitcoin has value and will continue to exist for the foreseeable future. I don't believe any of the other altcoins have much value. And of course, I could be wrong, and I'm more wrong than I'm right. If I was right, even 51% of the time, I'd be a trillionaire by now, but that is not the case. So take everything I say with an incredible grain of salt. A couple things that I'm not going to be talking about tonight. Predictions. I have no idea what the price of Bitcoin is going to be a year from now, a day from now, 10 years from now. Dogecoin or Shibu or Australian shepherd sheep or whatever it is. I don't know too much about the hype coins other than that they are probably just there for the hype. And this is very much going to be an AMA and not really a Shamoon going on for forever. So I'm going to try to be respectful of people's time. So with that being said, I'm going to try to shoot for ending right around 7:45. With that being said, what's going on? Bitcoin AMA note. Can everyone see my iPad screen?
Yes.
Yeah. All right.
Yes.
So what do you guys want to cover? So let's just kind of make a quick agenda and then we'll go through it.
When should we start buying?
Now. That's easy. But we can cover buying strategy.
So like what is the difference between like the Bitcoin and the other altcoins? What is the big difference like?
Different BTC versus
one question I have is, do we really need Bitcoin for blockchain? I mean, aren't they technically two different things? And if blockchain is the real thing here that's important, then why is Bitcoin necessary for that? Or is it even necessary for that?
or Bitcoin versus blockchain? Okay.
Hey, Shamoon, is it okay by any chance we can use the existing font so it's going to be a much easy to read?
Oh, you mean the
when you're writing notes there?
Yeah.
On the screen, if you can maybe use an existing font, just start.
Oh, type it up? Yeah, I could try to type it up. I type slower than I write, but I'm happy to try that. Okay, what else?
Why governments are not willing to accept it as an alternate form of currency? Like China recently said that they won't be recognizing, and that led to the entire downfall. So why is it so like up and downs happening with the governments, financial institutions saying yes, no, sometimes? Why is they are so confused?
Okay. So let's call this confused. Who else? And we can add to this list later. So, but I just want to kind of get a few starting points up at least. Any other things? One or two more things that people want to kind of discuss?
The tax implications.
Okay.
The best platform if someone wants to start investing. What is the best platform?
Would you like to discuss a little bit about taking the losses or something on a downturn? because some of us do mistake mean buy it and incur mean profits, all those kind of things. So is it a good time mean wait and then buy again?
Okay.
Storing,
What else?
storing
How
change stuff,
Sorry, what was that?
taking control of your own currency.
Ah, your keys. That's a very important thing to discuss. In fact, we might want to start there. Okay, one more thing before we get started. Any last thing that you want to add to the list? And again, we can continue to add to it. We may or may not get to everything. So
how much would be like a percentage of investment, like if someone wants to diversify the portfolio?
allocation and diversification. Okay. All right. So let's kick off with, does everybody here kind of know how Bitcoin works, or should we start there? What do we think?
Can you just give a brief start there? Just
Sure. Okay. So let's start with the absolute basics, right? You have, I'm going to call her Alice. You have Bob. In a pre-Bitcoin world, Alice wants to send something digital to Bob. So Alice would use PayPal, or maybe email, or maybe Visa network somehow, maybe ACH, to send value. Now, value could be dollars, it could be rupees, it could be yen, it could be whatever it is, to send value. Now, the problem, of course, is that each of these things has some central authority, right? So even email will have to go through Gmail servers or Hotmail servers or whoever. Alice can try to send Bob $50. PayPal freezes it or reverses it or whatever the case may be. Doesn't actually happen. Through ACH, banks reverse, all these things happen, right? So what's the actual problem that Bitcoin aims to solve, right? We should probably start there. Anyone want to venture a guess? What's the actual problem?
To remove the central authority.
That Bitcoin solves? Yes, it's to
Enable peer-to-peer transaction.
Yes, all of that specifically.
Decentralized.
Decentralized, that's the word.
A public ledger.
So decentralized, trustless. This is a very important part. Transaction. Can I make somebody a co-host so they can let people into the waiting room? Anyone want to volunteer for that? Any volunteers? Because I keep getting.
I can do that for the next 20 minutes. I have to drop off after that.
Okay, so maybe make co-host. Okay. Right. So the fundamental thing, all Bitcoin enables is decentralized, trustless transactions. Bitcoin or Satoshi doesn't presume to tell you what the value of the transaction that you're making is. There's no concept, right? It's just, it now enables this. And this is super powerful here because in a world before Bitcoin, this was impossible. Decentralized might be possible. Trustless might be possible. There's actually one more word I want to add here real quick. Irreversible. Right, that was a big thing to Satoshi. Okay. So how does it do it? Well, in the Bitcoin world, there are nodes, right? So this is a node A, B, C, D. And let's just assume that every node is a miner. Every node doesn't need to be a miner, but let's just assume that every node is a miner. A wants to go ahead and send 1 Bitcoin. B. So A constructs what's called a transaction and broadcasts it to everyone that A is connected to. A is connected to C, A is connected to D. So now all of these players, A, B, C, D, now know about this transaction. So let's give this transaction an ID of, I don't know, 5231. So transaction 5231 takes 1 Bitcoin from A and gives it to B. Simple. And in this very simple world, each node has 1 address. In a PayPal world or a Venmo world, it's very easy. I'm sending money to B, so I'm simply going to let PayPal or Venmo or the bank know, hey, take $50 out of my account, send it to this person. PayPal goes in their database, makes that transaction, it's done. In Bitcoin world, there is no database, there is no PayPal. So how do we do it? We have this idea of the blockchain. Now the blockchain is interesting because you have each of these are blocks. All right, so this can be block 0, block 1, block 2, block 3, block 4. So that means the latest block is block 4. But not every node in the network knows about the latest block. Because of things like latency, maybe only node B and C know about block 4, where A, B, C know about 3, and A, B, C, D know about 2. So everyone knows about block 2 and agrees on block 2. D doesn't have a great internet connection, so A is actually not aware that block 3 has been mined. And A's connection is also not that great, so A is not fully aware that block 4 has been mined. So, and again, if I'm losing people, ask questions. This is about to get a little complicated before it gets simple. So now that we have these blocks, right, and these blocks keep adding, when a new block is solved, it just gets added to the chain and it gets broadcast to everyone listening, and some nodes will eventually hear about it. Now, when block 5 gets broadcast, D may finally hear about it, and B may hear about it, and A may hear about it. So now D's caught up, and D will accept that block 5 is the longest block, even though D knew nothing about these blocks. D didn't know anything about 3 or 4, because D thought 2 was the latest. But then D got a notification from someone he was connected to that 5 is the latest. And in Bitcoin, when you hear about a new block, the rule is the longest block wins. So since 5 is the longest block, D accepts it. Now D knows about 4 and 3 and 2. And eventually everyone will catch up. This is why there's something called confirmation time. This is why a Bitcoin transaction is not considered instant, because it may take up to 10 minutes for the entire network to hear about this. Because we don't know who A, B, or D is. This is very important. You actually have no idea who these miners are, who these nodes are. They're just random computers connected. So that's blocks. I'm gonna get into mining real quick, because I think that does everyone understand mining, or do we have questions about mining? Do we not understand mining? Yay, nay. Should I cover mining or no?
I think you just cover it a little bit.
Yes, please.
All right. So,
And just a question here. So this is good for the block, what you said just now is good for other cryptocurrencies or only for Bitcoin?
any blockchain-based thing will have a similar structure where you have blocks that build upon each other. Okay, so mining. So everyone's heard of these mathematical equations that Bitcoin supposedly solves. What's the equation? It's super, super simple. So there's something called a hash, and for those computer science people, a hash is a one-way function, which means if you take as the input the word hello, you run it through some function, which in this case is what's called SHA-256, you will get some, let's call it a number, 0, 5, 2, 1 as the output. If you pass another input, HELLP, now mind you, we only changed one character, right? And we changed it by 1. You will get a totally 2690, totally different hash as an output. And this is key. I changed one character at the end, but the entire hash will be different. And the only way to know what the hash of something will be is to compute the hash. You can't know in advance. If I say to you, what's going to be the hash of HELLN, you have no way of knowing or guessing until you actually go through the SHA-256 function and run it. And the thing is, that takes time. It takes non-negligible time. It's computation. In fact, in Bitcoin, we double hash. So because you don't know what the hash of HELLN will be, nobody knows, nobody in the universe can know until you go through the process of actually running it. So you go ahead and you run it, and you find out it's 71269. So what Bitcoin does is it takes the header. And in this case, the header is, let's just say the letter is HELL, right? And the last character here, in each case, we're going to call what's called a nonce, Nonce. Each miner guesses, literally guesses what the value of the nonce could be. So one miner guesses it's going to be O, A, B, C, D, a number, whatever it's going to be. Every miner is guessing. And the goal is to keep getting hashes until the hash that you end up getting is less than or equal to the target number, right? So for example, the current target might be 0071. Each of these is larger than 0071, which means nobody has solved the block. So a few thousand more miners guess, and it doesn't end up being more than that. Finally, a miner guesses it's HELLA. He checks the hash, and it ends up being 0052, which indeed is less than 0071. So we have a winner. So now that this miner, whoever this miner was, let's call him miner D. He guessed it, he got it right. He is now going to broadcast to everyone he's connected to. He's connected to A, B, C, Z, L, F, the solution. He's going to say, listen, I'm working on block number, and let's say this is block 5. Block 5, I figured out the nonce such that the hash is less than the target value. Every miner checks it and says, yeah, okay, that makes sense. Your solution of A actually does solve it. So we accept that you solved it, and we're all going to start solving the next block. Does that make sense to anyone? Is anyone confused by that? It's about to get a little confusing right now. So I just want to make sure you're caught up before we get there.
Who decides the target number?
That's what's about to get really confusing. That is the perfect question. So who decides the target number? The network. So there's rules. Every 2 weeks, which is 2016 blocks, there's an algorithm that says, on average, how long did it take to solve a block? If the average time was, let's say, 9 minutes, the target number goes up, plus equals, let's say, 5, right? Well, let me not speak in computer science speak. Let me do target equals whatever the previous target was is now the target plus 5, because well, actually it should be harder, so it should be minus 5 in this case. So now, because it was solved in 9 minutes, because in Bitcoin we want to target 10 minutes per block. So if we're solving over the last 2 weeks on average 9 minutes, that means the target that we had was too easy. So let's go ahead and adjust it. So now we're going to adjust the target to make it slightly harder. Because if you think about it, guessing a number below 0071 is pretty hard, but it's even harder to guess a number under 0066, right? That's even less likely. So that's how the target shows it. And it's a known thing every 2016 blocks. It's part of the network rules, right? So multiples of 2016, everybody knows the block time, everybody adjusts it, everybody transmits that out. If you decide as a miner, I'm going to violate those rules and I'm going to solve for a target that's 1,000, the miners that you send to won't accept that because that violates the rules, right? In order to be Bitcoin, you must adhere to the rules. You could be something else and not adhere to the rules. Bitcoin Cash, Bitcoin Satoshi's Vision, Bitcoin Gold, all of these, they're all different permutations. They have their own rules and they're not Bitcoin as a result. But now here's another interesting thing. So here we said this idea of HELL is the block and A is the nonce. Well, let's break that down. It's not actually HELL, it's a block. So there's the block header, and then there's the block transactions, right? So there's two parts to a block. The header includes metadata like the block number, right? So this is where we say block 5. It includes things like the number of transactions. It includes things like time and date and other things of that nature. The transactions, for those that are computer science friendly, is basically a big array of individual transactions, right? The first transaction is what's called a Coinbase. And this is different than Coinbase, the company. So the first transaction is called a Coinbase, and that's where Coinbase, the company, came up with their name. Every other transaction, if you remember, we're taking Bitcoin from A and we're giving them to B. So we're taking 5 Bitcoin here. We're taking C is going to give 2 Bitcoin to D and 1 Bitcoin to E, and on we go. So these are all transactions. But the Coinbase, and this is the interesting one, when Bitcoin first came out, the block reward was 50 Bitcoin is going to go to miner D. So every miner is solving a different block because the first transaction is paying themselves, right? So every one of these miners, A, B, C, D, is deciding, I want that Coinbase because that's the economic incentive, right? Everyone wants that Coinbase because that's 50 Bitcoin you get. So when D is solving it, it's different than when C is solving it. It's different than when B is solving it, right? Because when B is solving it, B is going to make the Coinbase paying himself 50 Bitcoin. All the other transactions will be the same, unless B decides I don't actually want to include this one. So pop quiz, why would B not want to include this transaction? It's too large and the fees are too low. If anyone's ever sent Bitcoin to anyone, there's something called a fee, right? So when you send along these Bitcoins, you can send along a fee. So the fee in this case might be 0.001, 0.00001. Maybe this transaction, the guy was super cheap and did 0.00001. So miner B is like, you know what? It's a really large transaction. You know, sending a lot of Bitcoin to a lot of different people. And by large, I don't mean large in terms of value. I mean large in terms of computational space, right? Like it is physically large on disk. So B could choose to not include that. In this case, D did include it. So in a super high level nutshell, that's mining. Any questions about mining, or should we move on to the next thing? Yeah, nay. There's a few more technicalities, but if people aren't interested, I won't go into them. Going once, going twice, mining. Okay, so that's mining in a very, very, very quick nutshell. So broad strokes, the takeaways are mining is decentralized because remember, each of these nodes is decentral. They don't know who they are. A miner could literally be anyone. You could get a miner and do it in your basement and no one would know. There's no identifiable information to a miner other than maybe an IP address, and even that, not really. Anyone can be a miner. And now that mining has become pretty large, it's not that a single miner will secure that Coinbase. Many miners will share that Coinbase. So maybe, you know, me and 10 of you decide, hey, let's all mine. If any one of us gets the Coinbase, we're going to split it and we're all going to take that Coinbase. So we're going to craft that transaction to pay 5 Bitcoin to me, 5 to you, 5 to this person, 5 to that person. And if any one of us, now that we're all solving for the same Coinbase, we have a better shot than someone that's solving for their own Coinbase with one miner. Okay, and in terms of how large is this, it's measured in hashes per second, right? So this is also called the hash rate. So when you hear that the Bitcoin hash rate is, what is the current Bitcoin hash rate? Bitcoin hash, let me just Google that real quick, is currently 1 point, where'd it go? Is this true? So the current hash rate is 140 million terahashes per second. Terahash is a billion hashes is billion hashes. So this is a million billion. So is that right? So that petahashes or something there? See if I can find it as a straight number. We're at exahashes now. So it's actually 140 exahashes per second, which means the Bitcoin network at large is running this SHA-256 function 140 quintillion times per second, right? So 140 quintillion, which is a hell of a lot of zeros, times per second. The network is basically doing this useless thing of saying, okay, I've got this block, I've got this header, let me just guess a number, run it through this function, and see if the output is less than the target. So that is how the power of the network comes into play. It was designed explicitly to be expensive. So everyone worried about energy, and suddenly everyone's, oh, energy. It's designed to be such. Because if I magically could match that hash rate, I could overwrite the network and say, you know what, all those Bitcoin actually went to my address instead. But because it's so large, so expensive, no person, no entity, maybe governments can reasonably compete with that. So this
quick question, Brother Shamoon. Will the target number keep changing until the average time approaches 10 minutes?
Yes. So if for 2 weeks, if the target, if we were took 20 minutes per block, the target will lower. And conversely, until every 2 weeks it'll adjust to try to get to 10 minutes. So when people say proof of work, this is what they mean. The network wants to know that you have worked to solve the block, right? The network wants to know that whoever you might be that have mined this block, that you've expended considerable effort to do so. How much effort? Well, in this case, the network at large has expended 140 quintillion guesses per second. And as a result, that is why we have proof of work versus proof of stake, which we'll get into when we talk about the others. So proof of work, again, it's not a flaw that it consumes energy. It is by design that it consumes energy, because energy is something that is expensive, will always be expensive. We're gonna have solar breakthroughs and wind power breakthroughs, but the economic incentive for you to cheat the network is not there, because if you have enough computation to cheat the network, you're better off mining, right? So if, for example, you do have, 50 terahash mining farm or something, you could try to cheat the network, sure. You can try to reverse some transactions and broadcast new transactions, or you can contribute to the network and help it grow and strengthen it and actually earn more for it, right? And what does price go by? In my opinion, that more so than any other metric, right? So for example, if the price of Bitcoin was $5, you could rent a bunch of computers, and let's assume that the hash rate, just to keep it simple numbers, was 100 exahashes per second. This is infeasible because the network is expending considerable amount of energy. Miners all over the world, in China, in Russia, in Iceland, in the US, and wherever, are expending incredible amounts of energy to get $5 Bitcoin. Now, remember, I said in the beginning, the Coinbase was 50 Bitcoin per block. Now, the Coinbase is actually 50 divided by 2, 25, 12 and a half, 6.75 Bitcoin per block, which means whoever gets the Coinbase would only be getting like 30 bucks, right? That means the network is spending all of this resource to get $30. That doesn't seem like a great way to spend computational resources and energy. If the price of Bitcoin is $50,000, which it was not too long ago, that means now each block is worth, let's say, 6.75 times 5123, $337,000, right? So now every 10 minutes, the network is worth $337,000 of new money at $50,000. So, and that stays, right? So if you look at any hash rate chart, it will more or less line up with the halvings, right? So the halving cycle Basically, every 4 years, there is a halving, which means the Coinbase used to be 50 Bitcoin back in 2009. And then it got cut down to 25 back in 2012. Then it got cut down to 12 and a half in 2016. And now it's 6.75. It got cut in 2020, which coincidentally, but Satoshi is not one for coincidences, our presidential election year is in the US. So every presidential election year, there's going to be a halving, which means the amount of Bitcoin left to mine will go down substantially, which should mean that the price should increase. There may be a delay, like we've seen in 2012, 16, and 20. It was the next year that saw these massive run-ups. Will it happen again in 2024, 25? I think so, but I don't know, right? Because it all comes down to energy consumption. These people aren't giving energy for free, so they have to use the energy. Oh, wow, that took a lot longer than I thought. Okay, so let me stop with the technical stuff. Let's get to the things that people are interested in. Okay, and again, a lot of this is my opinion, so it can be completely wrong, and probably is, because what do I know? Buying strategies. Let me cover this one because I'm pretty impassioned with my beliefs here. Buying. Okay, so if this is the price of Bitcoin, and this is time, all right, the absolute best time to buy would have been here. The next best time would have been here. Then the next best time would have been here, then here, then here. Except you could not have known that, right? Because if you are here in time, you have no idea what the future is going to be, right? So when we look at these fancy charts, we're like, oh yeah, this would have been a good time to buy. It would have been, but look over here now. Is this price going to go up, down, sideways? We have no idea. Everyone is going to become a prophet all of a sudden and decide that they're going to have all these reasons and theories. Oh, it's going to go up because of China, down because of Turkey. It's going to stay the same because of Botswana. It's going to go down because of technical analysis patterns. It's going to go up because it's a momentum breakout. Everyone will give you theories. And I'm here to conclusively tell you that if you are here, every single person is wrong. You will read CNBC, you will read CNN, you'll read Yahoo Finance, and they'll all say, some analyst somewhere predicts that Bitcoin will now be $700 billion or $5 or somewhere in between. And they are all wrong. If they're right, luck, right? Enough people guessing numbers, somebody's got to be the right person to guess the right number. If anyone was in a position where they could tell you what the price will be from this point forward, they would not need to be in a position where they have to tell you anything. So I may have shattered a lot of parts right now with all of you technical people that believe you can read charts. I'm here to tell you that you cannot read charts. If you can read charts, that, in my opinion, is basically astrology. Okay, so rant over. So when do you buy? Always. Every red line, you buy. Each and every red line, you're buying. How much do you buy? That's the actual question. So the question isn't when to buy, it's how much to buy. So each of those red lines is, let's say, a week, which means every week you buy whatever is incredibly affordable to you personally. If you have a great job and you're making $500,000 a year, go ahead and buy, I don't know, $500 per week. If you're making $50,000 a year, go ahead and buy $25 per week. Whatever number that you can really comfortably afford, buy that number. Because there's 24 people here. I'm guessing a good 18 people here will, once the Bitcoin price goes down and settles, will not think about Bitcoin again for the next 4 years. And that's the mistake. If you start buying now, even $25 per week, between now and the next 4 years, that's $25, 52. I should be able to do some math faster, but 25 times 52 times 4, you will have spent $5,000 in Bitcoin over the next 4 years, right? If you start right now. Not a lot, right? I mean, some it is, some it isn't, but it's reasonably affordable. If Bitcoin, let's say it 20x in this cycle from low to high, if it 20x is again from a new low, let's say $15,000 or $10,000, now Bitcoin's worth $200,000, which means your $5,000 could be $100,000 4 years from now. So it seems almost foolish to not be buying if $25 is too much, buy $10 a week. Whatever is affordable to you, it should be comfortable, because if you stretch yourself too thin, you will not do it. When the price of Bitcoin goes down, the first thing to be cut from your budget will be buying more Bitcoin. And that is the last thing that should be cut from your budget. You should eat less, get less coffee, make coffee at home, make lunch at home, but you should not stop buying Bitcoin. Okay, so this is a strategy that's known as DCA, or dollar cost averaging, right? So the key here is I said how much dollars to buy. I didn't say how many Bitcoin to buy. I said how many dollars to buy. Because when the price is here, you're going to end up with very little Bitcoin for that money. But when the price is here, you're going to end up buying a lot more Bitcoin for that same $5, which means you're not going to get the average price between here and here. You can get a price much closer to here because you've ended up with more Bitcoin here, right? Whereas again, if you could see the future and you're over here and you know it's going to go down, you should wait. But you cannot see the future, so you should not wait. You should still buy $5, $25, $50, $100, whatever it is right here. Now, there's another strategy that I personally employ. So that's DCA. All right, we don't know what the future will hold, but we know that we're here, and we now know that the price is here. I don't know what the future will hold, but I know that I'm here. So I may want to buy a little bit more. So I'm going to continue buying at my weekly intervals on the way down. But at some point, I'm also going to buy here, right? So this is what's called BTFD. Buy the effing dip. I'll let you guys use your imagination there. But basically, it's saying when price goes down, buy more, not a lot more. This is where people go crazy and they'll spend $50,000 buying at one clip. Oh, the price went down 20%. Let me spend all this money. If you are normally buying $500 per week, maybe you load on and buy an extra $500 this week. Not an extra $5,000, just an extra $500. If you normally buy $25 a week, maybe you go and you buy $50 this week because you'll accumulate more at a lower price. Because if you go ahead and go big with it and say, you know, I'm gonna spend $50,000 this week because the price is down, next week when the price goes down more, you're gonna be kicking yourself because you just bought more, right? You spent $50,000 to watch it become 40,000 and 30,000. Whereas if you just buy a little bit more, it'll average down, because even if you bought at, even if this happens, let's say you ended up buying here and then the price just continued to go down, you won't shoot yourself that much because you're going to continue to buy more on the way down. It'll average out. The slightly higher price you paid will amount to nothing. So that is the when to buy and how much to buy. Whatever you can afford, if you can do daily, do daily. But most people don't have that cognitive attention, myself included. So weekly is at least reasonably sufficient. And small amounts. People think that what's $50 going to do? What's $20 going to do? But you got to think about multipliers here. When Bitcoin goes up, it doesn't go up 5, 10, 20%. It goes up 10x, 20x, 30x, right? So even $1,000 invested over 4 years, if it goes up 30x, it's $30,000 right there, right? That's a car that you've gotten basically for putting aside, you know, $20 a week. That seems like a pretty good deal to me. Okay, so we're technically at time, but I can go a little bit longer if people are okay with that. So what do we want to talk about next week? Quite a bit to go through. Oh, where to buy? Don't buy on Robinhood. Don't buy on Cash App. If you do not control the keys, if they do not let you send the Bitcoin somewhere else, you do not own the Bitcoin. So that leaves Gemini, leaves Kraken, leaves Coinbase. I don't use any of the overseas exchanges. You're welcome to, but I personally don't. It's just not worth the hassle. And as far as, oh, they charge more in fees and this and that. Even if they charge an extra 1% in fees or 2% in fees, again, we're talking about an asset that goes up 100%, 200%, 1000%. So if you're optimizing for saving 2% in fees and giving up 1000% return potentially, it seems not worth the fight. Now, you could, of course, lower your price on Coinbase by using Coinbase Pro. And if you increase your volume, the fees come down a little bit, but not really worth that fight. What else? So what do people want to cover next from this list? Oh, this one's super important. Governments versus Bitcoin. I am going to shatter a myth right now. So the headline. Blank bans BTC. Every month, every 3 months, like clockwork, some country bans Bitcoin, goes the headline. 2 months later, Bitcoin's in full swing in that country. Nothing was banned ever, right? And many countries have quote unquote banned Bitcoin, and China's not. This is probably the 40th time that China has banned Bitcoin. It's headlines, it's news. What you read is rarely true when it is written by someone that doesn't understand the industry or the impact here. And especially keep a watch out for these words when reading articles. Could, can, might. These mean nothing. You'll read the headline, Bitcoin bans China could send Bitcoin spiraling. Of course it could. It could also send Bitcoin to the moon. It could also cause the price of dairy to go up. It could also cause car crashes to go down. Anything could happen. It's a weasel phrase used by people that don't want to make commitments in their statements. So anytime a country bans Bitcoin, don't give it much credence. Even the US has been on the verge of banning Bitcoin. I don't know, 30 headlines a year talk about how the US might ban Bitcoin this year. The SEC might look into regulating Bitcoin and banning it. The IRS might claw back Bitcoin. All of this could happen. None of it does.
Just a question here.
Mhm.
If Bitcoin is regulated and it becomes like one of it, no one controls it, is a beauty, so no government in it, okay? So once it is regulated, that means it will be another currency, it might lose then its the value it is gaining.
Sorry, what was the question? If they regulate it, then what was it?
Yeah, if it is regulated, there are 100% traceability, all those kind of things, and certain controls, which the regulators want on top of it. Then Bitcoin might lose its value. The way people are investing in it. It
So
is my.
Yeah. So this is the word that you just used, right? The meaningless word. Anything might happen. Right? Quantum computers might come out and destroy banking as we know it.
Yeah, so I don't want to get into it, but point is, governments want to get in, and eventually, there will be, otherwise there is no fight between currency. It is another product which evolve and people will embrace it. But unless government has full traceability and another kind of thing, they are losing that control. That is the struggle going on, which is.
Let's be clear about one thing. This idea that governments don't have visibility into the Bitcoin network is it's a red herring. It's a pointless thing that the media says, because most drug deals, illicit transactions are done with cash, right? And the government has no visibility into the cash, and they're fine with that. Are they going to ban cash next? They can't, right? Because people need cash, people got to spend money. These are media talking points. Of course, if a government does this and this happens and this happens, Bitcoin might end. Sure, it might, but it also might not. So in my opinion, these are fruitless things that people get into in various WhatsApp groups and Facebook groups to fill the narrative void that they have, but it is meaningless because anything might happen at any time. And when it comes to probabilities, the argument of the government doesn't have visibility into Bitcoin transactions, so it could be used for illicit things. Cash, right? Bank of America, or was it Wells Fargo, transacted how many billions of dollars illegally with money laundering? They were fined $1 billion, and we all called it a day. So it's already happening in the non-Bitcoin world. So if I were to guess, I would say it doesn't really happen that much in the Bitcoin world, but if it does, I don't think that it's going to be the end of the world problem. And let's also be clear what we mean by regulate Bitcoin. Governments cannot regulate Bitcoin. They can regulate your entry and exit into Bitcoin, right? Because if you own the Bitcoin and you have the wallet and you have the keys, you can send it to anyone you want and no one can stop you. If you keep it on Coinbase or Gemini or Kraken or PayPal or Robinhood, yeah, sure, they can stop it, they can take it back, they can do whatever they want, which is why I don't recommend keeping large amounts of Bitcoin on exchanges. So they can't regulate it, they can only regulate entry and exit.
And which exchange do you recommend?
So when it comes to exchanges, exchanges and keys. Okay, I wish I'd covered this a little bit more, but not enough time. So to buy Bitcoin, Coinbase, Gemini, Kraken are the three large ones in the US that are okay. I wouldn't call them regulated, but they are scrutinized. If I had to pick one, and I do, so I use Coinbase because now it's also a public company. So there's more scrutiny behind it. There's more checks, there's whatever, more visibility theoretically, right? Now, not all public companies are good public companies, but it's something. However, this is only when buying. You should immediately be sending your Bitcoin to your wallet, right? Which you own, you are the custodian of, you keep track of, and you are responsible for. There is a huge risk, however. If you keep your Bitcoin on Coinbase and you forget your password, no problem. If you keep your Bitcoin on your wallet and your wallet gets erased, if somebody hacks it, it's gone. It's irrecoverable. All of the atoms in the universe cannot coalesce to get that wallet back. So maybe we'll do another session on just securing wallet. I was hoping to cover some of that today, but that did not happen.
Yeah, just one question. Can we use like Exodus wallet? Is it good?
You could use, and so when it comes to wallets, personally, I stick with Electrum. And a little bit just fun, Wasabi. What I care about in a wallet is that it is open source, because I don't want anything, I want to be able to see the source. I care that it's not run by a for-profit entity. Now, Electrum is not for profit at all. Wasabi is. So that's why I don't really use Wasabi extensively. I'm more curious about Wasabi. That's why I'm using it a little bit. I want to know that it's not tied to any company's finances, because then the incentives change, right? If a company that owns the wallet makes money from it, I don't know. Do they really have my best interest at heart? I don't think so. So Exodus, if I recall correctly, is a for-profit company that helps you exchange. So I don't know. I mean, companies go out of business, things happen.
I have a question. If you move your Bitcoin from like Coinbase to Electrum, would you have to pay taxes on that?
Great question. So just putting out there for the recording, I'm not a tax professional. I'm not advising anyone on taxes. I don't know enough to advise anyone on taxes. However, there is current discussion within the SEC to force Coinbase and others to report if you send more than a certain amount. Now, what does that reporting mean? What does it do? You got to talk to your accountant about that. Like right now, if you go to a bank and you deposit $50,000, they have to report because it's larger than $10,000. That doesn't mean anything's going to happen because they report it, but they have to report it. So there's current regulation being discussed within the Bitcoin ecosystem where if you send X thousand dollars off of an exchange, it started at $3,000. Now I'm reading it's $10,000. I don't know. Then they have to report it. What else? Any other questions?
Can you have blockchain without Bitcoin?
You can have blockchain. In fact, most blockchain is without Bitcoin, right? So this is a great question. So blockchain, it's called versus Bitcoin, right? So if you remember before, blockchain is simply that structure of literally a chain of blocks, right? Where 1, 2, 3, 4. Block 4 depends on the information in block 3. Block 3 depends on the information in 2. 2 depends on the information in 1. And that's why it's a chain. Which means if you were to try to reverse whatever happened in 2, you cannot, because we're already up to 4. You would then have to rewrite 3, you'd have to rewrite 4, it'd be too computationally expensive. So that's all blockchain is. The Bitcoin blockchain in particular is secured with a proof of work algorithm, which is SHA-256. SHA-256. Now, and this is my opinion, so I'm more often wrong than I'm right, but I haven't yet seen a good use of blockchain independent of this. Ethereum is the example that comes to mind. Everyone is, oh, Ethereum smart contracts, you can do this, you can do that. Yeah, but all that's stupid because of this idea of gas. If you do write an Ethereum smart contract that, let's say, eBay, you can have eBay without a central authority. Isn't that cool? Sure it is. But now who's going to pay the gas for that transaction? And how much is that gas going to be worth in dollars, right? So if I'm buying a $2 GI Joe on Ethereum Bay, but the gas is going to end up costing me $15 because of the price of Ethereum, I'm not going to do that, right? So smart contracts that use these blockchains, I think, are a dumb way to do it. I don't think it makes any sense to use this incredibly complex structure of a blockchain to do that. Now, why should you use a blockchain? In my opinion, when you cannot trust other people, right? In the case of Bitcoin, nobody trusts anybody, and that's why we have a blockchain. But when private companies try to roll out blockchains, it just seems incredibly dumb to me. And again, I could be wrong here, but if I am, like, oh, we should do real estate on the blockchain or these NFTs, right? Let's stick with real estate to keep it simple. You can have titles recorded on the blockchain. Sure, you can, but we're all trusting that whoever put it there was honest and did it properly, right? So some private company at the end of the day, we have to trust, put it there properly. If we're doing that, why are we doing all this rigmarole of a blockchain and not just writing it to a Postgres database somewhere? Or if we have to trust the entity anyway, like we all trust PayPal to secure their database, to make the proper records in their database, and it works, right? PayPal's database does what it's supposed to do. It's good enough. So
You're saying that the problem that it's trying to solve doesn't exist.
I think correct. With Bitcoin, yes.
Right, okay.
Because for those that are, I don't know, more bored than I am, right? So the actual problem that Bitcoin solves is the Byzantine generals problem. If you have 3 generals, right? So this guy, and this guy, and they have to attack this guy. But there's horses, there's no electric communication. How does A and B, how do A, B, and C communicate to let each other know, let's attack at dawn? If they attack at dawn together, they beat D. If 2 of them attack, D will win. If 1 of them attack, D will win. So easy enough, A can send a messenger to B and say, hey, we're gonna attack at dawn. But now B has to respond to A, or else A doesn't know he got the message. So B responds to A saying, okay, yeah, we're gonna do it. Problem is, D can intercept the rider, right? He can intercept A's rider, kill him, and send a new message to B with his own rider saying we're actually gonna attack him, right? So traditionally you need some sort of a central authority, right? So E, that A would talk to, B would talk to, and C would talk to, and E would say, yeah, we're all good. Bitcoin made it so that A, B, and C can talk to each other without having to trust anybody. Now, this is more of a philosophical idea here, but that's the actual problem that it solved. It didn't solve money, it didn't solve cash, it didn't solve any of that. It solved this very specific problem. And the rest of them, in my opinion, and again, I'm caveating it repeatedly, I could be wrong, they don't solve this problem, right? So whatever the latest hype coin is, Litecoin, for example, being the Litecoin it doesn't pretend to solve a new problem. It just solves this problem with different parameters. Faster confirmation time, different mining algorithm. That's it. All right, any last questions? How about this? 3 more questions if anyone has any.
So you said use DCA algorithm to keep buying. But when do we sell? I mean, is it a store of value like gold? You just keep buying and just keep sitting on it?
Okay, so when do you sell this fantastic Bitcoin? In my opinion, when you have a use for the money that could not otherwise be done, right? So you buy $20 of Bitcoin every week, you spend $1,000 in Bitcoin, suddenly it's gone up to $50,000, and your dream house is there. All right, go for it. Your dream car is there. All right, who am I to tell you what to spend your money on? That's on you. Don't do it though, just to take the profit and sit on it, right? Because then you're accumulating more USD, which is the opposite of what you should be doing the long term. If your goal is to, people have different goals, and that's entirely on you what you want to spend your money on. But if all you're going to do is buy Bitcoin at 30,000 to sell it at 70,000 and call it a day, I wouldn't do that, because then you've given up the potential future profit for nothing. And is it a store of value? I don't think that the use case of Bitcoin has yet been determined. The original use case was supposed to be you could buy coffee and transact and send cash to each other. That turns out to be a really bad idea, because why would you buy coffee with Bitcoin if it's going to double in a month, right? You wouldn't. So now people are like, oh, it's a store of value. I don't know, is it? Is it really a store of value if it can go 50% haircut in a month? That doesn't seem like a store of value to me. So much like TCP/IP or SMTP or HTTP, I think that the true use of Bitcoin has yet to be determined. And for those that are not technical, HTTP is the hypertext transfer protocol, which is what we all use to surf the web. The original use case was supposed to be to read articles and journals and academic and military research. Now it's used to find a date. Right, so the ultimate use case seems to be very different than the intended use case. And I think the same is going to be true of Bitcoin. Bitcoin is a protocol, an asset, all once, which is unique.
These problems that you're saying that potentially Bitcoin could be used to solve, would they be developed as like dApps?
So I don't know if anyone's familiar with has anyone seen this phrase Taproot anywhere? So there's a protocol upgrade in progress, and I think 94% of miners have signed on. Because Bitcoin is decentralized, you can't just upgrade it, right? You can't say, hey, download new software, now it's new Bitcoin. There is no person that says, yeah, this isn't Bitcoin. The whole network has to agree that this is Bitcoin. So when a new idea is introduced, so SegWit was probably the last big one, everyone has to agree, or else it's not Bitcoin. So back in 2016, 17, the Bitcoin Cash people were talking about we should have bigger block sizes. Not everyone agreed, so that ended up not being Bitcoin. That's now a separate thing. Taproot is the first step to smart contracts in the Bitcoin ecosystem directly. So Taproot, okay, so this is Schnorr signatures, right? So what what Taproot enables is Schnorr signatures, which can maintain parts of the okay, we're not going to tell us, but Merkle tree. So this is going to get to some serious cryptography here, but the point is Taproot is the first step to enabling smart contracts within Bitcoin directly to do some of these dApp type things. What those will be, I have no idea. But more importantly, not only do I have no idea, nobody has any idea. And anyone claiming to has a best guess.
Yeah, so my last question is like, is it easy to use the Electrum? Just go Google it and download the Electrum wallet and start accumulating the BTC there?
Is it easy? It is easy to use. It is very, very, very complex to secure. So if you are going to maintain your own wallet, you have to have some serious security protocols that you personally follow. No one else can use your computer. No wife, no husband, no kids, no parents. You can't download things off the internet randomly. You have to be absolutely virus free. You have to have good passwords. You have to have all that in place. So the use isn't the problem, it's securing that's the problem. Your level of paranoia should be directly proportional to the amount of Bitcoin you have. If you have $100 in Bitcoin, no one wants to lose $100, but if you do, we'll live, right? You'll survive. If you have $100,000 in Bitcoin, you may want to up your security protocols. All right.
So do you recommend like just to buy a separate laptop and keep it for crypto? Is that what you recommend? Something like that?
Depending on the value that you have, right? So again, if you have like $1,000, then it's not worth buying a $2,000 laptop to do that, right? But if you're trying to secure $200,000, it might not be a bad idea to keep a separate laptop that is air-gapped, meaning not connected to the internet. But the most important thing, it's not the hardware, it's the seed phrase. So Electrum and many wallets have a 12-word seed phrase that you have to commit to knowing. Because anyone with that seed phrase can recover your entire wallet and steal it. But also you can recover it. So should your laptop, because hardware is hardware. Laptops die, Trezors die, Ledgers die, Nanos die, they all die. The seed is what you need to recover it. So I have actually tattooed mine under my eyelids so I could see it at all times.
I didn't know that was possible.
Which part? Tattoo under your eyelids?
Right.
Well, so the only problem is I tattooed under there, but there's no light under there. So I can't see it. So it ends up being pointless. That's a joke, by the way. So if anyone wants to hack my body from my eyelids, it's not there. So, all right. Well, with that, I want to thank everybody for coming. I apologize for running a little long. I didn't cover some of the stuff that I wanted to cover. I actually did want to cover wallet security because I think that's an important part of it. I know it's pretty technical and pretty in the weeds. And my intention there is that if you're going to invest in it, you should know about it. It's not just a thing that appears on a ticker, right? You should understand what it is if you're going to put some serious consideration into it. I think
a quick question. How about the Nano X wallet? Nano X.
Hardware is hardware. I could steal your Nano. What's stopping me from hiring a pickpocket to reach into your pocket and stealing it? So okay. I'm not a fan.
Thanks so much. Thanks so much, Shamoon, for this really awesome. Could there be another session just on the security and the wallets?
I'll set another one just for security. This one a little bit more technical and I spent more time than I wanted to there, but I will set up another one just for wallet security with live demos. So I'll set up some wallets locally on my computer just so everyone can see how it works.
That would be awesome. Thanks so much.
Thank you, everyone.
Assalamualaikum, Shamoon boy.
Thank you so much.
Quick question. If we can have a live face-to-face conversation, like you mentioned about the barbecue, what's going on with that?
Barbecue? There's no barbecue. It's a Shamoon BQ.
Oh, okay. I'll take that.
There's no the barbecues. That's old technology. That's like
Shamoon Q.
Shamoon BQ.
Shamoon BQ. Okay, when is that? So we can have more conversation about the same thing.
I'm trying to figure that out, to be honest, because apparently COVID restrictions are relaxing. So I don't really know. I mean, if I could do it this year, that'd be great. I heard that New Jersey is going to go maskless as of Friday. I don't know if that's true or not true. So I'll probably wait until July or so to see if things settle down by then.
Okay, so we have to wait.
Like all good things in life.
Will do. Inshallah, we'll meet.
Absolutely.
Inshallah ta'ala.
Yeah, if anyone, I mean, I'm here in Central Jersey, so if anyone wants to grab coffee or anything, as long as you're paying, I'm always down to meet. Just don't use Bitcoin to pay for the coffee because that would be silly.
I was about to say that.
Yeah. Use your Ethereum though. Yeah.
I know you will say like, I'll take the Bitcoin, I'll pay for the coffee.
Yeah, you can pay with Ether. I don't care about that. Or Litecoin or the rest of it. Just don't pay with Bitcoin.
Yeah, Bitcoin is the gold right now.
It's not gold. It's a thing that gold isn't. We just don't know what it is. We'll find out.
We'll find out. The time will show its a true value.
Just like HTTP is ultimately used for lonely people to find each other.
Okay.
or ordering food. That's another big use case of HTTP now, right?
As you say, it's Bitcoin, and every conversation is like intruding like, okay, what is it? Everyone is like, why he's so mad about Bitcoin? So wait and watch, something like that.
Sometimes you have a feeling about an idea that it's going to be a big deal. You just don't know why, right? I think that's what most narratives are.
It has shown its colors.
It's
It's
starting.
gonna be more colorful. It's starting to show its color. It's gonna be more colorful. Just people have to wait.
Just keep buying. When people talk about selling, like again, I can't tell you what to do with your money, but there's other things that you can sell. If you want to sell stuff, go ahead and buy some stocks, wait for them to go up, sell them, buy gold, sell it, do what you want to do. But this doesn't seem like it's worth selling for USD anyway, especially right now, because we're about to hyperinflate like Zimbabwe. So.
Okay. That's
right.
Good advice.
Thank
Take care.
you, everybody.
Thank you for the time.
Thank you, brother Shamoon.